All right, let's talk about something that is, without a doubt, a crucial piece of your financial puzzle, but one that so many of us kind of push to the side. I'm talking about disability insurance. We're going to break down what it is and, more importantly, why you really need to care about it.
I want you to pause for a second and really think about that. Like for real. What if, next Friday, your paycheck just didn't show up and it wasn't coming back for a while? Everything, your mortgage, your groceries, all your bills, it all hangs on that income. It's a pretty terrifying thought, right? But that's exactly the problem we're here to talk about today.
And this is the answer. Honestly, think of it as the superhero in your financial first aid kit. Its whole job is to swoop in and give you an income when your main one gets cut off because you're too sick or hurt to do your job. It's that simple. Okay, so let's kick things off by just, reframing how we look at our biggest asset. And I'm not talking about your house or your stocks. Nope, it's your ability to get up every day and earn a living. That's it. That's the engine that powers everything else. So protecting it has to be priority number one.
The absolute best way I've heard this explained is that disability insurance is your income parachute. So picture this. Your career is flying high and then, bam, an unexpected illness or an accident sends it into a freefall. Well, this is what lets you pull the ripcord and land safely, giving you that cash flow you need to live while you get back on your feet.
So you're probably thinking, okay, I get it, I need this. How do I get it? Well, it can seem kind of confusing, but honestly, it really just boils down to three main ways you can get this protection. These are basically your three options. You might already have some coverage through your job, you can go out and buy a policy for yourself, or it might get offered to you when you, say, get a mortgage. And trust me, they each work very differently. So first up is group insurance. This is the one that most of us are familiar with, right? It's the plan your company offers. It's super convenient for sure. But here's the catch, and it's a big one. It's not really yours. Your employer holds the policy, so if you leave that job, poof, the coverage is usually gone. Path number two is where you're in the driver's seat, an individual policy. This is a direct deal between you and the insurance company. You own it, you control it, the money comes to you. Now, yeah, it takes a bit more work to set up, but the huge advantage is it's portable. It goes wherever you go, no matter how many times you change job. And our third path is creditor insurance. You've probably seen this. It's what the bank offers when you take out a big loan, like for a house or a car. Its only job, literally its only job, is to make your loan payments to the bank if you can't. So the key thing to remember here, it's designed to protect the lender, not really to protect you. Okay, so that last one brings up a situation that so many people face. You're getting a mortgage, it's exciting, and then they offer you disability coverage right there at the bank. So let's really zoom in and unpack that specific choice. So this is the big question, right? Should you just check the box and take the insurance the mortgage lender is offering, or should you go get your own personal policy? I mean, they both seem to do the same thing. Make sure your mortgage gets paid. But how they work and who really benefits, well, they are worlds apart. Let's just put them side by side. With mortgage insurance, look who the beneficiary is, the bank, the lending institution. They get paid, and that money can only be used for the mortgage. You never even see it. But with your own individual policy, you are the beneficiary. The cash comes straight to your bank account for you to use however you need. You own it, not the bank. The mortgage insurance might look cheaper, but you give up every ounce of control. And this, right here, this is the bottom line. It's so important. If you get seriously sick or injured, your mortgage is probably not your only financial headache. What about groceries? What about utilities or medical bills? A personal policy gives you the cash to manage your entire life, not just the one single debt that the bank cares about. It's all about that flexibility. Okay, so maybe you're thinking, individual policy, got it, that's the way to go. But hold on, we're not done yet. There's another really important layer here, because not all policies are built the same. The real difference comes down to the promises, the guarantees the insurance company makes to you. Let's think of this as 3 levels of security. At the very top, the gold standard is non-cancelable. This is a rock-solid promise that the insurance company can never, ever raise your price or change your benefits all the way until you're 65. That is the certainty you're paying for. A step down from that is guaranteed renewable. Here, they can't single you out and cancel your policy, but they can raise the rates on your whole group. And then at the very bottom, you have cancelable, which, as you can guess, offers the least security. They can pretty much change anything. So why does all this technical jargon matter? Well, because you're buying this thing for peace of mind for the long haul, right?
A stronger guarantee means more stability, more certainty. It's really the difference between having a safety net made of steel cables versus one that's, made of flimsy thread. You want to know exactly what you're getting for decades.
All right, to wrap things up, let's talk about how this whole landscape is changing. I mean, the way we all work is totally different than it was 20 years ago, and the insurance industry is finally starting to catch up. This stuff isn't just for the 9-to-5 crowd anymore.
I mean, just look at this number. In 2023, over 13% of the entire Canadian workforce was self-employed. That's a huge number of people. Freelancers, gig workers, entrepreneurs. These folks don't have a company giving them group benefits, which means having their own personal disability insurance is, well, it's not just a nice to have, it's absolutely essential.
And the good news is, the industry is responding to this new reality. We're seeing new kinds of policies pop up, like ones that can cover a contract worker even if they're between gigs. There are more affordable options that just cover accidents, and some of the newer policies are really smart. They define a disability based on a drop in your income, not just whether you can perform specific job duties, which is perfect for the modern economy.
So that brings us full circle, right back to the beginning. Your ability to earn an income, that's what pays for everything. It powers your goals, your dreams, your life. It is, by far, your single biggest financial asset. So the question I want to leave you with is a really simple one. How well is yours protected?